Okay. So, a little bit about the. A lot of you guys want to know what I think about the Fed meeting yesterday. So, here's my, few minutes of rant again, about this, I guess. What I think about the Fed meetings is, first of all, they're completely bullshit. Not because of the obvious, because they say one thing and do another. Not because of that, but even if they do follow up and follow through on what they say they're gonna do, that ship has sailed. We're too fucking deep in debt. So the sum total of the Fed meeting to me is bullshit. But to educate you a little bit on how to view these fundamental news, let me break it down for you. So we have had 9 years of non-stop money printing since Obama took office. And essentially, that's called quantitative easing. Okay, we've had 3 major rounds of that. It's a process where they print up money, they buy bonds from banks, and on and on and on. Okay, they do that. Their spill on it is that this stimulates the economy. So now they came out and they said, which is laughable, that's why I'm laughing. They said that we're confident now that the economy is strong and robust. So we're going to finally raise some interest rates so they can shrink their balance sheets. Okay? Let me tell you what that means. What that means is more fucking problems. Because on one hand, they're printing money out of thin air, okay? Completely fucking made up money. Just printed money, no value behind it. Money printing, money supply has to be supported by either inflation or labor behind it to back it up. We haven't had either. That's why the Fed always aims for 2-3% inflation a year. I mean, they've achieved that over the last few decades, but they only do that to justify printing more money. Okay, so the truth is this: the economy is not strong. The U.S. economy, I repeat, is not in good shape. Historically, we've had 3% growth in GDP year after year, on average. Some years more, some less, but on average. For the past 8 years, we've had 1.5%. 1.5% after trillions being printed to stimulate it, and it hasn't done it. So what makes you think that now changing course and raising interest rates is not going to impact the markets? They're either dumb, which they're not, they know exactly the ramifications of that, or they're setting things up to keep printing money. So what they're going to do, because you got to read between the lines, the same morons came out this morning, the same dickheads that back in 07 were saying how strong the economy was right before the fucking crash. Okay, the same guys, I don't know how they still have a job. It's amazing. The same knuckleheads came out this morning. Oh, see? Markets reacted to the hawkish talk of the Fed. Dollar went up, euro went down, and gold went down. What the fuck are you talking about? Dollar's gone down 11% from 102 to 92, 10% in the index the last few months. The dollar's rolling over as it's supposed to be, because there's too much fucking debt. There's too much of it around. So, I mean, and the dollar should have gone down on zero interest rates all these years and went up the last few years. So they're disregarding 10 years of correlation and erasing all of that based on one day's price action. The dollar went up. Are you fucking kidding me? The dollar went up 100 pips yesterday on the news. You know what 100 pips is? 100 pips is 0.1% of a currency pair's value. If that currency is trading at 1 to 1, 100, right? That's 1%. 100 pips is 0.1%. 0.1% move. And they're saying the dollar went up. So this was going to happen. They promised to raise rates in December. I personally don't think they're going to do it. They might, but I don't think they're going to do it. They have postponed that rate hike the last few years because they have a way to cover their ass. They always say, if we hit certain numbers of growth in the economy, then we'll raise them. And then they come back 3 months later and say, well, we're not quite there yet, so we're going to postpone this. I don't think they're going to raise them again because they're not in it to tighten up. Quantitative tightening is not what they do. QE is what they do. They keep printing up fucking money. They're bankers. Bankers' goal is to get you more debt. That's why the fundamentals will take over. You know, in theory, in a perfect world, when rates go up, that currency goes up, which is why the dollar went up a little bit yesterday. In theory. That's why the pound, the last few weeks, has been on a fucking tear. Great Britain is raising interest rates. Okay? So, you need a healthy amount of interest rates, in my opinion. And we've been at, you know, for a healthy currency and even a healthy economy. We've been at 0 to negative interest rates for the last few years. And the dollar's gone up. Go fucking figure. Now you can say, yeah, the dollar went up because the stock market went up, because typically they go together. Maybe that's the case. But again, another example where the correlation is broken. And these clowns come out with their headlines, all the news outlets, all the Wall Street Journals and MSNBCs and everybody, the same people, the same bunch, and say, oh, there you go, man, we're going to go down. We're going to go up on the dollar, disregarding the fact that we're down 10% just this summer. This is what's going to happen. Two things. Either they're not going to push it, either they're not going to raise interest rates in December, which I think is the case, or if they do, is only because they know what's going to happen if they do that. If you do your research, you'll know that 16 out of the last 19 recessions have one thing in common. They raised interest rates at all-time market highs at that specific time period. It's not a coincidence. If they raise interest rates in December, markets will tank. It's overdue already. We're at those levels right now, right? I've been calling this. Dow 22,500 to 23, S&P 2,500, NASDAQ 6,500. Everything is so overvalued. We need a reset. It takes a while. Bubbles can go on forever, but the longer it goes, the harder the fucking crash will be. I think we're at those levels now. I don't even think we'll make it to December. Historically, because I look at patterns and trends, historically, October and November have been that black month for stocks. So if I had to pick a time, it's you know, it's a fool's job, they say, to pick timing for a top or a bottom, but we're at top already, so I think we carry on, you know, a little sideways and fighting it out at these top levels till October, November, and then we go down. But if we don't, by December, if they actually do make the mistake of raising interest rates, markets will tank. Markets will tank, and the dollar will go down with it. You will disregard the fact that interest rates go up. The dollar will go down with the stock market. So gold will go up, and the euro will go up. It's that simple. Okay? So you want to know these things to kind of prepare yourself and trade and invest accordingly. A good trader is not just a technical trader. I mean, I'm you know, I have the opinion that I have on stocks and gold based on technicals mainly, but when they're supported also by fundamentals, and the fundamentals are very clear. We're in a completely artificial economy. There's almost no going back. Even though it's a horrible idea to keep printing money because you debase the currency, the dollar has fallen 94% since 1930. 94%. $20 bought an ounce of gold back then. It takes $1,300 now. It's no coincidence. We never left the fucking the gold standard. We never left it. Not really, because 80% of what moves gold is the price of the dollar. It is no coincidence that with the dollar having tanked 70 years, gold has only gone up. Almost fucking identically, proportionally, and symmetrically to the dollar. Okay? Which is why I think we're on the verge of the next fucking major bull cycle in gold and silver. Okay? So that's what I think about the Fed meetings. That don't mean shit to me. It's laughable. Their reactions are short-lived in the markets. But unfortunately, there's the caveat. Unfortunately, markets react to interpretations of the Fed talks. And those interpretations, unfortunately, are wrong, because you got to read between the lines. What they're saying now, they're trying to shrink the balance sheets, okay, and trying to do the responsible thing. But really, they're just washing up money. They're just laundering money. They're trying to make that debt disappear, but artificially, by either raising interest rates or not buying, because that's what you said. We're not going to be buying any more new bonds. We're going to stop printing money and just let the old ones mature. It's a very creative, very clever way of erasing debt. So on one hand, they're printing money out of thin air, and on the other hand, they're making that debt disappear out of thin air. It's unbelievable. I mean, it's beyond me what's going on with these clowns. Do they know what's going on? Or is there a conspiracy? Because they can't be that dumb. They know the ramifications of what they're going to do. They know what's going to happen. But just looking at the trend, let's forget motives for a second. That's for a different subject, because they're bankers. We know that. They want to get you more into debt. That's their main, just like a credit card company, right? They want you to keep fucking spending. They'll let you borrow. A credit card company will literally give you 15 months interest-free for you to transfer all your high interest credit cards and wipe those accounts out and transfer all those balances into a new card with zero interest rates, let's say, for 15 months, some 21 months. Who the fuck would do that? Have you ever thought about why they do that? Because if you look at the numbers, like I have, 73% of people, even if they move their high interest debt into this new card with zero interest, they never get to pay it in that 15 or 21 month period. And then you know what happens? 25% interest rate on your balance the first month after the free interest term period. And on top of that, what happens is, because now you feel good because you alleviate yourself, you transfer bad debt into good debt. Now you say, oh well, now I got all this fucking balance, I got all this credit limit on this accounts I just cleared. So you keep spending. Then you find yourself twice as much in the hole. That's what they've done with the government. That should tell you who runs things. They print money out of thin air. They lend that money to the government with interest. So how does the government pay that back? Through taxes. They own the government, and they make the government tax its people to pay the fucking debt back. Debt that is not sustained by anything. It's printed money. It's money out of fucking thin air. Okay? So that's why I think the fundamentals are about to take over, because something has to give. You can't just write off debt. The only way you can write off debt is by default, like a bankruptcy with businesses and people. You file for bankruptcy, I mean, you're fucked after that. But if you file for bankruptcy, okay, you don't know anything anymore. That's fine. But it's basically default. And the U.S., the implication is that the U.S. government will never default on its debt. Are you shitting me? We'll never be able to pay this off. 20 trillion is what they say is the national debt. It's more like 50 to 60 trillion dollars. That's the real number. The economy is not strong. Their talk yesterday assumes that, or makes you think the economy is strong, because that's what a hawkish speech is. A hawkish speech is basically, oh, we're confident now that we're in good shape, so we're going to raise interest rates. They either don't know and they're that dumb, or they know and they know what's going to happen if they do raise them. Markets are going to fucking tank, and it'll cause a recession because the economy is not strong. Retail sales are down, auto sales are down, real income is down. Have you been to the malls lately in America? I've said this for the last couple of years. Macy's, dead. JCPenney, Sears, Dillard's, whoever the fuck the other ones are. Retail is dead. Maybe we got to thank Amazon for that. It's all right. I mean, good for them if they took their business away. But I've been saying this for a while. Those retailers will be, I think, extinct in the next 3 to 5 years, if that. They'll be the next Blockbuster or Radio Shack, because it's all online now. But it's caused a major depression in this sector, because these are 100-year plus companies that have employed hundreds of thousands of people over the years. They're going to go bust. Retail is down. Auto sales are down. Real income is down. There's barely any inflation. Bond yields, by the way, the purpose of bonds, because they're government backed, the rich love this shit because they can protect themselves against inflation, right? The purpose of a bond investment is, you can buy 5, 10, 20 year bonds, right? They pay a nominal interest, but the purpose of it is to beat inflation. Because, if you're not making money, if you're not earning on your money that you have stashed under your pillow or in a safe deposit box, you're losing, right? Because prices go up over the years, so your dollar will have less purchasing power. So they buy bonds. Well, check this out. Bonds, for the first time in, I don't know, maybe ever, are yielding less than inflation right now. Less than inflation. So your bonds aren't even covering your ass. I'm telling you, man, we're in bad shape. We're in bad shape. There's no need to panic. Just know how to play it. The way to play right now, and I hate it because I'm starting to sound like a fucking gold bug, but I'm sorry. It's probably the only way to play this. The only other thing that I see that might have a few stocks have already blown up the last few months with Trump. The only other sector that I see is defense. I've been saying this, on my Facebook for a few months. I am convinced that we're going to war with North Korea. I'm absolutely convinced. And if that happens, forget interest rates, forget stock market correlations, forget dollar. Gold's fucking going up. It's blowing up. If that happens, gold can literally pop $100 an ounce a day for like a week or two straight. Because that safe haven will come in. That safe haven factor will kick in finally. So just keep this in the back of your head. Don't listen to pundits. Do your own research and make your own interpretation of it. A lot of these guys, I don't know how they can possibly be still around talking. These are the same guys that were bragging about the economy right before the financial crisis. And there was a very few small bunch that was betting against it and made billions in the process. Okay? So, just like everything else, don't follow the herd. You're typically going to get slaughtered. Okay? Don't just be a contrarian just for the sake of being a contrarian. You have to have valid reasons. I'm giving you the valid reasons on a macroeconomic standpoint. Okay? With the stock market, I haven't been a contrarian. I've been buying the last fucking 7-8 years because of my technical reasons. I knew we would get to these levels where we're at today. We are literally at those crash levels, my all-time target levels on the indexes. So I'm out of stocks, needless to say. Investment-wise, I trade. Forex is the bread and butter, but I'm only invested, not trading, invested in literally gold, silver, and stocks in this sector, because I think that's the only thing that's going to see any major upside the next 2 to 3 years. Okay, so I don't know. We'll see. We'll check back on this, but they're supposed to raise interest rates in December. I don't think they will. I'm calling their bluff. And if they do, if the stock market hasn't tanked before then, which I think it will, that'll definitely make it roll over. And then the dollar can go up all it wants on higher interest rates. I don't give a shit, because then gold will blow up on fundamental reasons, which is when markets goes down, when the markets tank and people get out of it so that they don't get slaughtered, that money goes into gold. There's a limited supply of gold as it is. If all that investment comes into it, price has to go up to justify the amount of investment and demand. Price has to go up because there's only so much supply. It's basic economics, okay? And technically speaking, we're set for a pop, for a great short squeeze, so that helps too. Anyway, so that's what I think about the Fed. Don't bother with it, but if you do want to look into it, to use it as an additional tool to confirm your overall bias, then this is how I think you should interpret things. You got to read between the lines and not just go with the headlines the next morning. Okay. And by the way, gold. Go back on my timeline on Facebook from last week, where I said we're bound to probably pull back to 1292. Just go back on that. I'm not wanting to brag, but that was pretty damn good. Even with my standards. It's September 21st today, after the Fed meeting yesterday, right? It's Thursday, so Fed met on Wednesday. Gold touched 1292. That's where I called it. Pull back to 1292 and then we'll resume. I don't know if we're going to make new highs. Nobody knows, but I think we will. But it came down to 1292 this morning, overnight. It's 9 o'clock at night, and we're back to 1298. I think something like that. So, all right. Talk to you later.